Good evening, ladies and gentlemen. This session is being recorded. Clueless 8 Trading, Frank. Welcome to the free market webinar update. And I think this is going to be, it's very eye-opening on a couple of the things that, observation and stuff that I'm seeing happening out there. I'm glad that all of you are here. Session is going to be recorded and uploaded to the Clueless 8 YouTube channel. For people who still haven't subscribed or clicked on the subscription follow channel on the YouTube channel, please do so. It's free. Just do it. Anytime I put anything up there, you'll be immediately notified, and I think that's very important. If you guys can hold on for about 30 seconds. I just have to attend to one quick family stuff, and I will be back up here. In the meantime, take a good look at the chart that I have in front of you, because we'll be going over a whole bunch of things, including some of the technicals that's going on. So just bear with me for about 30 seconds. Thank you for your patience. Okay, we're back online, and for people with the mics, can you just let me know if everyone can hear me?
Yes, I can hear you, Frank.
Okay. Who else?
Yes, Frank.
Okay, go ahead. Anyone else? People
Yes,
with
I can hear you, Frank.
Okay, and who's that?
Trina.
Hey, Trina, Miss Bolton. And I know Exita's there. We have Jasko. Jasko, can you hear me?
Yeah.
Excellent. Glad to have you here, buddy. We have Wayne. We have Milland, my very old follower and member, LaMichael. Joe, can you identify yourself, please? Oh, that's Joe Bastiano. What a name. Should be one of the mafia movies in New York City. Okay, sounds good. Sounds good. Yeah, he's I like some of Joe's stuff. He's a new free trial member. Great guy, Joe. So we have Tats, my good friend, and Exita, who's almost as good as family. Okay, so we're good to go. All right. So I'm going to kick off with, the problem with me is I'm unscripted, right? It sounds like a bad Trump movie, but that's really what I am. I'm unscripted, so I don't write down all my thoughts in one place, and I should do it, actually. It's one of those habits that, I write down a lot of other good stuff, when it comes to work and goals and things like that, paying bills, paying, debts, deadlines, things like that. But when it comes to the markets and stuff, I'm a little bit freewheeling. So I have to make sure that things that I'm delivering to my members are somewhat constructed. So I'm going to try to do my best. So forgive me if I, go off the beaten path when I'm talking about things, but I'll do my best. So saying all that, let me start off by saying here that first I'm going to give you the bad news. Then I'm going to give you the confused news. And then I'm going to give you, I think, is the good news. And it's all going to be not mixed in, whether it's a bull market or a bear market, or whether I think the market's going to go to, 19,000, or whether the market's going to go to 16,000, but just my feelings on what's going on here. First and foremost, I think we all relate to this. This is one of the most volatile markets that we have dealt with. No question about it. The funny thing is that the machines, as you know, from my constant, repetition of the same word, the machines and the algorithmic high-frequency trading programs, I think some of them know what the heck's going on. The problem is that despite technical readings on overbought conditions on certain levels, technical readings on this and that, the market really doesn't care. So what's happening is that things we think might happen within a matter of days or on a certain day, as we have clearly seen, and everyone please mute the microphone so I don't get any feedback. So things I think might happen over a matter of a day or so, or a matter of a couple of days, is being compressed without any exaggeration, within a matter of minutes. So that brings me to a very, very critical point. People who are not members, who are not actively, and I don't blame many of you. Many of you have great day jobs, you're running your businesses, you're working in a good firm. So just mentioning, but it's very, very hard for all of you out there. It's hard for me. So imagine what is out there for you guys, okay? That to monitor and see these compressed algorithmic movements within a matter of minutes. Look what happened this morning. Markets open, sold off hard, turned around like a monster, pulled back a little bit, and then just decided to move to the highs, and then ended the day at less than half of where it went. So in order to, and this I always make sure that I remind people, in order to really understand these type of movements, which are purely machine driven, no question about it, and don't fool yourself by thinking that these are fundamental reasons why the market's moving like the way they're moving. And I will tell you what the fundamental basis is, what the markets are trying to do in a minute, in a few minutes. But if you think that the markets and certain stocks are moving on certain fundamentals based on what's going on, then don't fool yourself. It's not happening that way. What we are seeing is basically a very advanced version of day trading by, again, the same words, machines and hedge funds. And when you start to see that, you start to get very confused. You're like, what's going on? Why is this stock going down? There's no reason why Facebook shouldn't be up $2 today. Why is Amazon up, $8, ends up $4.60? Why is Google, down, then up a couple of bucks? Why is Priceline at one point up 18 and then ends the day at $4.22? Why is Tesla? Well, Tesla's more moving with oil. That's a different story. Okay. Up 6 at one point, ended the day at 2.6. Why is Apple up $1.20? You feel like chasing it and then ends the day at frigging 19 cents. The only thing consistent about the market right now are the financials. So the swing trade on Visa, on Goldman Sachs, on Bank of America is a steady trade. Yes, give or take 30 cents, 40 cents, 50 cents. Doesn't matter. It's a steady trade. Goldman Sachs was recommended. By the way, this session is not about me to highlight, I told you so, I did so, and this and that. None of that garbage. I'm talking about the reality of what we are all going through. I'm not here to sympathize with people who are down, who lost, because I lose a lot. I win a lot, but I lose too. But I have no one to cry about it, right? So none of you should cry about it either, because there are always opportunities to make that and much more back. There's no question about it. But Goldman, just as its standard alert, was alerted last week. The stock is up, if I'm correct, almost 14 points from there. And still moving higher. So the point is that all traders, but primarily traders who are not really tracking these intraday movements within the market, are in the form of following the futures and following the S&P E-minis, which are critical, are really doing themselves a disservice. Now, if you can't do that because of other commitments during your day job, then in that case, do not day trade. Because if you're day trading or intraday trying to figure out why something is up or down, then you have to follow what's happening behind the scenes. And the dramatics that happen behind the scenes in the form of the futures market, which dominate everything that happens in front of us, is critical. So if you can do that, then don't do that. Which brings me to my other unscripted comment. On certain days, just don't trade. And it's the best thing you'll ever do. I've done it. I've done it before. And it's hard to do because you see something you like and it goes up 3 points. You're like, what the heck? I didn't get in. You start chasing it. You're not watching the charts. You're just watching the price. Bang, you get hit. So what I try to do all through the day is I try to put some very timely intraday charts for people to track on their own screens. Because what I'm putting up there and looking is not what's going to look like that in an hour's time. That's, don't blame me, don't blame the messenger, right? As Tad says, it's blame the machines. That's just the way it works. Now, swing trades, when you look at longer term swing trade type of patterns, a lot of them are very intact. And then some of them have very difficult patterns. Please, somebody mute the phone, please, so I don't hear their intimate discussions.
Okay. All right.
Okay, can somebody mute the microphone, please? All right, because I just heard them say they're just going to sell their Swiss account and then send all the money to Clueless 8. Okay. So the bottom line is that that you can't monitor short-term trades. You can monitor your swing trades by looking at short-term movements on what's going on. Look at this picture of what happened today. Today's Wednesday, right? So this is Wednesday. When you look at the overall picture from the point that we started, not 12 a.m. in the morning, but from the point that we started, which is 9:30 right here. Right, this is where we started the market today. Okay, at 2092. To what happened within the first 1 hour to what happened till 3 p.m. and then this massive sell-off and then a minor rebound as we're seeing right now. And this is a 5-minute chart. The key is, and this is where it gets very confusing, is there's no rhyme or rhythm what happens during the day. So when we're looking at stocks that we like and we think we're going to make money on them and we're going to do this and do that, the charts look fantastic, and all of a sudden they're just doing some real wacky stuff. Don't sit there and beat yourselves up thinking you did the wrong thing. You either stick with the game of what you think might be going on based on the long-term charts that you're tracking and then things that I put up, or you get the hell out of Dodge. Sell it, just move away. Don't sit there and try to microanalyze what's happening during the day because oil is going berserk after falling. The Japanese yen is moving at rocket ship speed after maybe dropping a little bit during the day. But if you're not tracking and I can't keep on saying this anymore, but if you're not tracking the index futures, the E-minis, and effectively managing your trades, if you have the ability to do it during the daytime, then this is the only service that will tell you this. Please, somebody mute the microphones, please. Okay, if you cannot monitor the intraday movements via the futures markets, then do not trade intraday. Because the price alone will never dictate whether or not you're going to make money or not. And I can assure you of that. Because the fundamentals of a particular company always work out over a period of time, but they're not meant to work out over a 48 to 72 hour period or over a 8-hour period that the markets are trading. I hope I'm clear about that. So the bad news is that effective trade management during the day, as you walk in and say, okay, I'm going to do this trade and this and that, is only effective if you can MYOT, which is manage your own trades, and you get a Tesla type of thing, which I purposely didn't put out on the Twitter real-time feed because it's such a fast-moving, dynamic trade that, like I said, I put up the charts up there, you take it, you follow it, you trade it. I've already put out where it can go or not go. So right there is money in your pocket if you can handle the trade. So that trade alone would be good for 4, 6, 7 points. And if somebody shorted it, it would be good for 4 points by the end of the day. So it's all there. So that's the micro stuff of what's going on. Let's take a look at what's happening on the bigger side of things, right? Which is the overall market. You take a good look at this picture of what's happening in front of you. And I've showed this many, many times, right? There is no doubt that the market is going to go higher. And I mean a lot higher. There are forces beyond our control, much bigger than us, which don't listen to what us puny morsels think, whether or not we're overvalued and undervalued, whether the central bank is a bunch of, what should I say, bandits and this and that. There's a global force happening right now because of all the central bank actions, the fact that companies are not overall reporting numbers as terrible as we think they might. And please, word of caution, please stop being an analyst. Okay? I worked on Wall Street for many years. And I started off my career as a junior analyst. I never wanted to get into that field in a big way. You know why? Because eventually they're all idiots. I'm serious. It's a fact. And I know a lot of them. And there's nothing wrong with them. They're smart people, but come on. If you analyze pure numbers, you'll never make it anywhere in life. Like there's an old saying in life, right? Life happens in between our grand plans. So you can sit there, and I hear a lot of people saying this, like some of my younger friends. They say, yeah, I don't want to get married yet, but when I get married, I want to have a kid yet because I want to save this much. I want to do this. You know what? Just do it, because life will fall into place. And if you have the right intentions, you will move forward. It's the same thing with markets. Stop making huge plans. Yes, you can have a constructive plan as to where you want to go. But if you microanalyze your point to death, guess what? Life will pass you by, just the way markets will pass you by, and you'll sit there saying, WTF. Believe me, these are words of wisdom learned from life and experience. And I've made enough mistakes in my life to know that. So if you think that you can really forecast a market based on numbers and this and that, well, you're soulfully very wrong. You're so wrong that it's not even funny. And the God honest truth is, a lot of you know how wrong you are. Because when it comes to it, where's that little, 1 second here. There we go. Because you are wrong here, you are wrong here. You are wrong here, you are wrong here. You are right maybe in the middle, you are wrong here. And at this point, you're certainly very wrong here. That's what happens. Because you're sitting there crunching numbers, you're sitting there listening to the media, you're sitting there listening to all the talking heads in your voice, especially after a couple of glasses of drinks, you listen to a lot of voices, right? And they're telling you, you know what, this market is done, the U.S. economy is done, the global economy is nothing but a house of cards. Well, who cares? Our whole life is a house of cards. So it's time to wake up a little bit. I know I get into it once in a while, but it really bothers me because I'm neither really uber bullish at this point, to be honest with you. We'll get into that in a few minutes. But to listen to the outside, not necessarily in our membership, but listening to the outside about how wrong everything is and how bad things are going to get and how bad the U.S. economy is, we're falling apart, the world is falling apart, makes me sick to the stomach because I've heard it so many times. In 1987 or so, like, I had no idea because I had no idea about the markets or anything like that, right? In the 1990s, I started in Wall Street in 1996. I heard about the Asian crisis. I went through it. I have no idea about the market. I just started in the markets. The world was falling apart. Then 1998, then 2000, the huge crash, the tech crash. Then 9/11, I almost died. The world was going to end every single time. And then came the Enron crisis, October 2002, same story. Markets are overvalued. Everything's a house of cards. Let me try to draw a card here. Does that look like a card? Okay. All right. I'll draw another card. So I'm not kidding around. I'm serious about this stuff, okay? So house of cards, everything is terrible. It's over. Then comes, 2000 and, well, that's 2002, because the market did bottom in 2002, not in 2001, okay? Not during 9/11. 2009, we're not even going back that far, okay? Then the huge move up. Then let's fast forward out right now to August, September 2015, 2016 here. The same old story played over and over and over again. But I can understand why. Because we're all stuck to our beliefs, because we're stuck to our baggage. Well, a lot of people who don't have baggage because they don't have years behind them, it's the crap that they believe in. It's the same old stuff. Everything is manipulated. Everything is this and that. Life has been manipulated. If you have some religion in you, life is manipulated by the prophets and God, right? So what are we talking about here? I mean, sometimes you got to sit back and think for a minute about the garbage that we tell ourselves. Okay? I'm a hardcore Republican. Okay? I believe in fiscal discipline. I try to follow it as much as possible. I don't believe in fanaticism. I don't believe in racism. I don't believe in dividing people. And I move on. I don't want to go ahead and kill somebody who doesn't agree with my views. Yes, I can have a verbal fight with them. I don't like putting people down. I don't want to look at some other people and say, oh, you're a different color and, you know, you sound, you know, you're a scumbag because you come from a different part of the world. I don't believe in all that crap. Okay? But at the same time, I am a Republican. I believe in certain fiscal values, some conservative values about things that go on. So when I hear a lot of the stuff that goes on with the markets, I hear extreme beliefs about what is going on. And that bothers me. But I can't change it. So let them have their extreme beliefs on what's going on. And the more extreme the beliefs that they have, that the world's going to end in a couple of years, we're going to basically just fall apart and die, you know, the Mayan landing, as I'd like to say, you know, the Mayans, when was the Mayans supposed to land? 2012, right? Wasn't that the big landing, which never happened? Or didn't have a little runway to land on? I'm not sure. Or maybe the Mexicans didn't build it, right? Bad joke. All right. So, so the point is that it's the same thing that's happening right now. So everything that I'm saying has a direct correlation with what's happening in the markets. If you notice some of the pieces that I put out there, and you look at this type of move in the market, right? Incredible. And it can go a lot higher, believe me when I tell you. Believe me when I tell you, all right? Beyond all your fundamental fanatical beliefs that, you know, that all of us have. Some more fanatical than others. Is that one of the pieces that I put out there in the middle of the day, I saw it, I'm like, wow. Blackstone, one of their flagship funds, lost $15 billion. What do you think? They lost $15 billion trading Amazon? They would be up $15 billion. Yeah. They probably shorted the market Kingdom Come, and that's what's going on. One of the major guys who came on CNBC today, and I found it, you know, I always tweet out, said, listen to him, he's a smart guy, because I believe he's smart, and if I say somebody's smart, believe me, they are smart. You know why? Because I'm not smart, so I like to listen to smart people. And trust me when I tell you that. So one of the things he said that they asked him, so why do you think the world's going out like this? He goes, one of the key technical reasons is for every one call on oil contracts, there are 9 shorts. There are 9 puts. Even now? Saudis don't have to even do frigging anything. Look at oil right now. This is your daily chart on oil. And just as a quick reminder, these type of market update sessions is to wake people up a little bit. To wake myself up a little bit. Okay? To remind us how stupid we are. Because the quicker we realize how stupid we are, the faster we'll be smarter. How about that? Okay, how about that? For a quote that you might want to plaster in your wall. Put up in your wall. The quicker you realize how stupid you are, the better off the faster you will be smarter. So here's a chart of oil. And if you look at this chart here, this is a phenomenal chart. this is a market structure low movement that is going to get up here by the end of the summer before you like it or not. Right there. So gas up right now. You know, get an old mobile home from some, you know, from somewhere out there and fill it up with gasoline. Or get some big buckets from Walmart and fill it up with gasoline, because oil is going to go to $52 chart-wise, and it's going to happen. So what happened to the guys who are calling for $10, $15 oil? I don't hear them that much anymore. Some of them are bold enough to come out and say, yes, it's going to happen. Sure, it's going to happen. The days of $1.15 for gasoline in some parts of Jersey is over. And if you guys are living in California, you'd be lucky if you saw $3, you know, regular gas, right? I know some of you guys in California, they're not driving regular gas. You're driving premium gasoline. It's going well past $4. So this guy just said it very clearly. He said, look at how the market is structured. Remember, it's what we think and then how the market is structured, right? What the market is structured, we don't always know, because we're not privy to that information that's out there within the context of the internal players in the market. Now, if these guys are 9-to-1 short, right? That's a short, that's the short ratio, if you want to look at it that way. You tell me, in your right mind, if you understand what I'm talking about, what's going to happen for every $1 move in oil. You're going to get a massive move on the price. That's a 9-to-1 short. There are 9 in there betting against the market, 1 or so betting with the market that oil's going to go higher. So ladies and gentlemen, as I conduct this thing here unscripted, that's the same crap that's happening with the stock market. And it's driving all of us nuts, because I don't want the market necessarily to be at these levels, but I love the fact that a lot of stocks that I like are not even close to their 52-week highs. And I love the fact that a lot of people are still, excuse my New York language, peeing on them. The fact that Facebook is sitting at 112, the fact that Priceline is well below their highs, not well below the highs, but good enough to be said they're well below their highs, okay? The fact that a lot of the smaller players that we trade with are well below their highs, that Goldman Sachs had a high of $219 with a book value of about a 171 to 175, and the stock's trading at 167, and no one wants to buy it, and the stock keeps on ripping higher, is exciting. You want to talk about an overvalued market. You want to talk about all major 10 sectors of the market above the 50-day moving average and above the 200-day moving average. We are not even close. Now, does that mean that I'm just going to go out there and just buy every single S&P call that I can get my hands on? No. But it does mean that if I had the liquidity to do it, I would buy a ton of SPX calls going into June, and just sitting there and saying, okay, all I'm going to do all day long is entertain my members. So guys have to start thinking. I'm not here to change anyone's mind, okay? People have to do what they do, what they believe in. I'm just giving you what I think the facts are on the ground, the things that I am deficient on. Because the path to success and true happiness in life is the fact that you have to be humble. You have to understand where you're going wrong. Well, I understand where I'm going wrong almost every day of my life. So this is not some bullshit service, excuse my French, okay, which tells you how great I am and what I can do and this and that. This is about humility, to understand what we are deficient on, which is we are all in our way of, in our own way, playing defense to the form that we haven't even come out of the cave. When was the last time, ask yourself, you went out there and you said, that's it, I'm going completely nuts? Yes, there are maybe a member or two who say that, but are they acting on it? Listen, even in my most bullish times, I'm talking the talk, but am I walking the walk? Have you ever thought about yourself? You're not even walking the walk. You're still sitting there in your training wheel saying, I'm not going to get a real bike. You haven't even started to really walk the walk. And what's happening is, this is the best part about it. This is the good news, that the so-called smart money, and believe me, I know, because I still have friends and contacts and things, I know. Hedge funds, all right? A bunch of the people that I talk to, things that you see in public are getting absolutely cremated, decimated, because they are so dogmatically bearish. It's not even funny. So if the big boys are losing their heads, we should maybe feel a little bit good. Remember, what is the measure of stupidity? Can somebody tell me what the measure of stupidity is? Seriously, I mean, I'm doing all the talking, but please, somebody pipe in and tell me how you measure stupidity. How do you compare it? Please step up, okay? Anyone? Can anyone hear me? Am I on mute? Hello?
We can hear you.
Okay, so let me ask you a question. Okay, how do you measure stupidity? What do you think? Okay, I'm still waiting. Can somebody give me an idea how you measure stupidity? I know how to measure my stupidity. I repeat again, how do you measure stupidity? Am I saying something that's offending anyone? Because I'm not getting any responses. Okay, should we just discontinue this webinar? Is anyone still there? Okay, I guess the webinar is over, right? Okay, somebody said, Joe,
We never give a thought about measuring it.
I'll give you, when you do so, okay, Tat said when you do something over and over again expecting the same result. No, that's insanity. Oh, by the way, I'll give you a difference why that thing is not right. You know why that's not right? Because as we're growing up, as I teach my kid and as I teach myself, what's the definition of persistence? Remember, my service deals on behavioral game theory. So what I'm teaching you all adults, and Maybe I'm older than some of you. Maybe I'm younger than some of you, but I'm probably older than some of you given the fact that I'm 90. Okay. When you do something over and over again, expecting the same results, that's insanity. But you know something? When you do something over and over again, that's also called persistence, called practice. So whoever made that statement up is wrong, because doing something over and over again makes you better if you keep on fine-tuning it.
But if you keep on making the same mistake, that is called stupidity.
That's right. I just said one thing. As long as you're fine-tuning it. What is practice? When Michael Jordan throws that hoop, boom, right? And he does that 1,000 times in 5 years' time. You think he didn't do the same thing over and over again? You think the first 500 times he did it right? So think for a minute here. But I'm still not getting the answer about one thing. The measure of stupidity, given the fact I didn't get any answer from anyone, which I'm very disappointed, to be honest with you, with you all, okay, on this front, is that you measure yourself somebody else who is stupider than you. I don't know if that made any sense. Because the fact is that what's happening right now with the market is that the market players, the so-called people who are smart about the market, are being so stupid, it's not even funny. So it should make all of us feel better that we are less stupid, because they are losing billions of dollars by not participating in this market and trying to short the market on every turn. But let me not get into that right now, okay? The fact is that there are that saying, and it's not a saying, it's a fact, that there's almost $1 trillion worth of S&P bets against the market that have still not been fully covered. I don't think, as traders who are just trading and who have never been on Wall Street or never understood how to manage real, money for other people and this and that, and I don't think any of you really have, okay? And good you haven't, because it's a real pain in the butt if you ask me, all right? The fact is, none of you are quite understanding the power of the fact that how wrong all of you are in underestimating the power of the markets as it's going higher. Because when the market's at 19,000 and 20,000, and it can happen, believe me, in a year, 2 years' time, you'll be sitting here saying, just the way you did when the market was at 15,000, saying, oh shit, excuse my French. And don't you think you're telling yourself that right now? When the S&P was at 1,200, I heard people say, oh my God, it's the end of the world. It's finished. It's gone. And we're sitting here at S&P 2102. When the S&P was at 1,800 just 2 months ago, a couple of months ago, all I heard was how, and again, I was scared too at that time. And I showed you what the probability was on the downside, but also what the probability was on the upside. But all I heard from most people was how terrible it was going to be. But here is where we go wrong from a behavioral game theory standpoint. As you're seeing, I am doing a long-term chart of Goldman Sachs with the call to buy it at around these levels, and also at these levels, but primarily at this level. Stocks at 166. It's going to hit 180. There's a gap fill here. And you know what the problem is? That most of you won't be around to even get that reward, because you'll be so... There's a gap. There you go. That's where the stock is going. It's a pure pattern symmetry in motion. When Goldman Sachs came out with numbers, you honestly thought that you all would really understand how to read that press release, that income statement, the balance sheet? You honestly think the stock is just going up on hot air? You honestly think that the stock reversed and just went berserk the same day because you know how to read a balance sheet? Look, I don't want to offend anyone, but I'm here to wake up people. People all think they're all friggin' geniuses. Oh, I read that. Oh, the earnings per share is this and that. Oh my God. You guys have no clue. Some of you have run businesses. Most of you have not run businesses. Most of you work for other corporations. And very few of you, or maybe none of you, have ever worked on Wall Street. You don't understand how they measure things. Yes, you sit there on your bed and say, oh my God, you know, everything's a house of cards. Like I said, you know, the PE multiple is this and that. In that case, why don't you go out there and work 14 years, waking up at 5 in the morning, coming back at 9 at night, and figure out how to read and understand how the dynamics of financial economics works. So don't, again, I don't want to offend anyone, but I'm being very straightforward here. Stop being an analyst, because the more you're an analyst, the more you will shoot yourselves. And you know how bad your tenure as an analyst has been on the side, right? I mean, all of you included. So here we have a beautiful cup formation over a couple of months. I'm not talking tomorrow, day after. And the stock is going to go to 180. It's a lot of money. This is the channel. So that brings me to my most important part. Technical analysis. Technical analysis, if we truly practiced it, and believe me, I fail sometimes too. In truly practicing it, I'm talking about, right? Gives you signals well ahead of what you think or I think or fundamentals or the noise around the market or this and that. And if there are very few people who follow technical analysis to the point where it is, you know, where they have the discipline to do it. So the ones who do, they do extremely well. So believe me, even after all these years, I'm still almost there where I can be robotic to the point where I can keep my emotions to the side completely and just say, stick to it, stick to it. And then a lot of the times it goes out of the way, and so you have to do what you need to do. Technical analysis in itself is not you know, the holy grail, but it does tell you things. So when you look at this chart, what does it tell you? It tells you that this is what's going on. Since May of last year, back in the channel, I'm going to go here. So if you took a crap load of money and said, I'm going to buy the 180 calls going out to June or July, because I know that technically the stock is going to hit the upper end of the channel. What happens at this point, I have no idea. The chances of this technical chart that you're looking at completely breaking down and going like this is a very low probability. It's a 10% probability. Like I say, life is about probabilities. So this looks more likely than this. So the stock goes from 166 to 80. You just don't make 14 points. And if you buy a bunch of long dated calls on a powerful company like Goldman Sachs, whether you like them or don't like them, I don't give a hoot. Okay? Because I'm not here for the political discussions whether Goldman is bad or good. So it's worth a lot. If you bought it down here as recommended, you'd be up a lot. So I'm just giving you an example of this because this shows our behavioral deficiencies on what we do with the stock markets. let me go over, so from a behavioral standpoint, this is one of the most important things I want to say. Always question yourself. If you can determine, and I'm not kidding around, I'm being dead serious here because I have better things to do in my life than sit here at 6:40 p.m. doing this free webinar session. I'm doing this because I want people to understand the struggles and the frustration that I go through. And believe me, you guys, go through a lot more. But at the same time, the difference between you and me is I actually admit it. And I work to fix it. I'm sure many of you don't even admit it. It's like having an argument with my kid, and he's a good kid. But sometimes it's just like, when you don't even accept your faults, how the heck are you going to fix them? I think the problem with a lot of traders and members are they don't even accept their faults. So how the heck are they going to fix them? Because the sooner you fix them, the better off you will be. It doesn't mean every trade is going to be a plus trade. It simply means you will be in a more comfortable position to react to situations on the ground. And I hope all of you understand that. So, I sound like friggin' Tony Robbins here. I'm not even going to get paid that much. His sessions cost $20,000 for a couple of sessions, right? And this is the free one. So I'll keep this short. All right. Look at this chart here. This is a chart of your market right in front of you. Does this chart look like it's going to just die tomorrow? Does it look like it's going to just fall apart and the bear market's going to arrive and Mario Draghi is just going to kill the market and Janet Yellen is just going to just completely destroy everything? And believe me, I'm very neutral about all these people. It means nothing. The market is on a powerful upswing. It will have corrections. I could see a 400-point correction any day. Any day. But for that, you have to follow the Twitter feed. You have to understand the dynamic algo charts that I keep on showing. You have to be prepared for it. But net, if you want to look at it in simplistic terms, the market wants to go, technically speaking, here. And that's around 21.25, 21.30. In other words, it wants to attack the previous high from May. That was 21.34.72. So if you go another 30 points from here, as I've asked many times and before, that's another 200 to 250 points. 2 to 250 points brings us to 18,300. You could be looking at that as a tradable top. What does a tradable top mean? It means a top that we can short and basically say, you know what, the market really needs a rest. When will that happen? In May. But if you just short everything and just go back to sleep like, oh, that's it, we're just going to, do this from that point on, the market's going to kill you. There is something fundamentally different than what happened to the market here and what happened to the market here. The fundamental differences are mostly macroeconomic. Large liquidities of central banks, stability in oil, the fact that energy companies, because of remember, the drop that happened across the board, okay, was primarily because a lot of earnings on the S&P were completely demolished by what happened to oil companies. Okay? So if oil is stabilizing, doesn't it make simple sense that their earnings are going to stabilize too? Or do you believe that I'm going to get free gas on my oil and filling up my gas tank at $20, $26 a barrel for the full tank, which happened at the lowest point when oil was at 26. Believe it or not, I paid $30 to fill up my truck, not to mention the other cars. So if you think oil is going to go back to 26, feel free to short the market to kingdom come. Maybe you're in bed with the Saudi king that I don't know about. Okay? So it's time to wake up a little bit, guys, ladies and gentlemen. All right? So if oil is going to stabilize between, let's say, 40 and 50, which is really what it's going to trade in, and all the big honchos on Bloomberg and CNBC will tell you the same thing. Oil between 40 and 50, don't you think there's going to be earning stabilization in oil companies, the finest oil companies that we have in the world? EOG, Exxon, ConocoPhillips, name it, Halliburton, the big ones, and then the smaller ones included. Don't you think they're going to stabilize because now they know what the range oil is going to trade in? Can I get a response to that?
Yes, Clue, I agree.
Okay, anyone else agree to that statement that I just made?
I agree.
Okay, so what I'm getting at is the macro picture to understand like where we're going, regardless of our emotional feelings. And believe me, I want the market to frigging drop 500 points because I lost a bunch on the S&P puts in the past week or so, right? What was it, week before, whatever? You know, looking at my technicals. So I have that revenge trade in my head too. But looking at the bigger picture, if oil stabilizes between 40 and 50, ladies and gentlemen, you will have a big spike in the earnings per share of our finest companies in the world, which are our energy companies. You know why? Because they handled themselves so well through this whole debacle. Okay? So they know if they have, remember, there are many, a bunch of members, and I know some of you guys personally who run companies. If you know what the overall demand picture is going to be going forward to a certain degree, then you can manage your cost controls and your production and your capacity utilization, whatever you call it, right? Your budget and your spending and your all kinds of stuff in a way which will increase your profits. This is big. This is the big picture. Now, if you tell me that oil's going to all of a sudden go from 40 to 30 and go to 30 bucks, ain't going to happen because it had a chance to happen after we didn't get that Doha deal. And what happened on the Doha deal? We had S&P puts. It lasted for 5 minutes at the open. DRIP, DWTI, beautiful profits, cover, go. Because when you see that type of turn, you know something else is going on. Right? It's wake up time. So this is big. And if this stabilizes as it is right now, then many other things are going to stabilize. So looking at the bigger picture here, we are going to get some major resistance where we are right now. Let's talk about how we can make some, hopefully we can make some real decent money on any type of retracement, but you have to be so quick. And I'll give you a reason why, a behavioral reason. You think we are the players in the market who move the markets? We're nothing. We're little flies that they don't even swat. It's like those big rhinoceros when you watch the Discovery Channel. All the flies are hanging over them and they don't even bother till the big one lands on them, right? Like a big eagle and something, boom. The big players who are getting shorted to the point where it's just like they're just dying. Okay, how about that? A lot of these hedge funds are dying right now because they constantly keep on doing the most stupidest thing ever, which is like insanity, right? The same thing over and over again because short a rising market. So we all want that 500-point drop. But it's going to come, and it's going to come very quickly, all right? I believe that we are going to test 2080. I mean, just track my charts and then put it on your screen and do what you need to do, because at the point that we hit 2080, it could happen in the middle of the night as a reset. This is the daily chart of the market in front of you. Cognitive bias. A bear looks at this and says, oh my God, it's so overbought. It has to come down here. Bullshit. It can stay like this. We could have another run where the market can basically move up to this level and then move sideways before it drops. Just because something moves higher towards these levels, right, doesn't mean it's going to all of a sudden drop suddenly. I believe the drop comes in May. I wish I had an exact date and time, but then in that case, all of you had to pay me $10,000 a month to give you that exact time and thing, time and day. Maybe I should ask people to like pay more. But the point is that it is going to happen. But in the meantime, don't get uber bearish about what's going on with the market. The S&P 500 had a candle this evening at the close like this, right? Come on. The 5-minute candle looked like, oh my God, you know, the world is ending. There's an old saying that in bull markets, fast traders take profits at the end of the day. Maybe that's what it was. Because right now, when I look up, futures are actually up flat to a bit more. So in the old days, I could look at this and say, oh my God, you know, this was really a bad thing. But all you have to do is do this and do it yourself. You don't even need me. Trust me. So this candle looks really bad. It really looks bad, right? Well, let me show you this. What about this candle? Back on yesterday. Oh, wow. That was yesterday. What happened? Fell hard, middle of the day. I mean, after hours went like this, went down. Markets opened up big. Now this. So maybe we'll come down a little bit tomorrow. So it doesn't matter, because you have to understand the force of momentum. A body in motion stays in motion. Remember physics? Maybe some of you failed in physics. Okay? A body, it rests, stays in rest. It's like me and the gym. I don't like going to the gym. When I go there, I love it. Right? Because half the time I'm sitting at 12 screens and trying to tell you guys what, you know, what's going on with the markets and how you can make more money. So the point is, these type of candles is not that ominous. Even a break. Go ahead.
I have a question. Here, if you see the width between the 34 and 50, what you described is becoming much lesser. And
Yeah.
cross.
So what does that mean to you?
If it crosses, that's what the downward trend starts, right? That's what we.
Oh, you're talking about
see.
you're talking about this width here?
That's right.
Okay, that's a good point. You cannot judge a downward trend based on a 1-hour chart. What you need to do, and this is a very good point, Vic. Is that Vic, right?
That's right.
Okay, so so you look at the daily. Does it show any signs of deterioration?
No, but
Exactly.
usually it starts with the lesser time frame and then carries to the longer time frame, right?
I don't agree with that. I wish it was that simple. Okay, I wish it was that simple. In my opinion, if you look at the 4-hour, which is the best way to look at it, right? There is no indications whatsoever of any deterioration based on the direction of the lines. Your concept is very commendable. I agree with you, but your assessment on the directional line is not correct. The best way to do it is, I mean, look, a bearish player, and believe me, I want to be bearish here. Okay, so don't take me the wrong way. This candle here is a reversal hammer right there. So one can say it's a reversal hammer. It's the end of, that's it. We're going down. Okay, so what do we go down? We can maybe go down 100 points, but if you're not quick enough, just the way this morning was, it will kill you. There is no trend change, because that's what we're talking about here. There is no trend change yet. Now, if you want to be a little bit early, which I can appreciate, and say, okay, there will be a trend change in May, whatever, here is the problem. That forces much bigger than us are so short the market that they are still yet to cover. Do you understand that part?
Yes. Yes.
That is the problem. That's what frustrates me when I short and I don't make money. Or I make quick tactical money during the day, whatever, but I can't stay swing short because there are forces out there that are billions and billions and billions of dollars short, and they are getting killed on every move in the market up. That's what is frustrating. So there is no trend change, whatever. Corrections? Absolutely. Look at that, how many we have had. So I would love to get one of these where it comes and retests the 2080 level on the E-minis, which would be fantastic. You can still make a lot of money off those type of things. But if you're looking for a directional change in the market, there is none whatsoever right now. If you look at the weekly, what is this weekly chart telling you? And tell me the truth, not what your thing. I'll tell you what the weekly chart is telling you. The weekly chart is telling you that we are literally going to go up to 2140, at least test the highs. We are going to test the all-time highs. That's a given. What happens after that? Stay tuned. We are going to test all-time highs here. So if somebody really wants to make so-called, well, high probability bet, don't intraday trade. Go out to maybe June or maybe even mid-May, because I don't think the real sell-off starts till mid-May. And buy some calls all the way up to 2160. Okay, because we are, whether we like it or not, and remember, the market's all about what we don't like, right? We know that. We are going up here, testing 2134 and then breaking out quickly. And at that point, in my opinion, could be a real tradable short for a good solid 800-point drop in the market. That is my real forecast, what you guys can all be actionable and make money on. How you structure your trade, I don't know. You can buy some long-dated calls and say, you know what? I'm going to buy this. I'm going to close my eyes and then hold my nose, and we are going to, by one way or the other, we are going to test 2134. It is going to happen. It will most probably happen, believe it or not, by the end of the month, because we're almost there. Is everyone clear about that? Is everyone clear about that? This move,
Yes.
This move here is going to happen. It's so much there. I mean, if you show your kid this picture and say, what do you think this is going? And, join the dots. They'll join the dots right here. And we're sitting here as idiotic adults and wondering why that the market is not going to go back and retest the old highs. That just shows how adults are the stupidest beings of all. Seriously. It's right there, almost there. And we're sitting there nitpicking. This pattern is going to get completed. Now, once it gets completed, you think it's just going to be like, oh, right, we got completed, so we're just going to crash? No, it'll probably move up a little bit more, create a lot of anxiety up here because no one knows how to climb a hill and look down. Ever climbed like a big not a big mountain, but a small mountain, and then look down and say, whoa, I came up all this way. Hopefully it didn't fall over. But the point is that that's what happens. Same thing with markets. It's going to hit here. It's going to create a small flag. People are going to be like, oh, that's it. It's the end of the world. No, it's going to move up, test another high, and then by that time, it's truly overbought. So looking at the weekly chart of the market, we are going to get back to the 2134 level. So if you want one sure trade where you don't have to look at your P&L every single day, because that's what really screws us, all of us up, right? We know that. Just buy the S&P calls going out to mid-May in the 2120, 2130 level. Put some out there. Come talk to me then. Anything else can happen in the middle. I know that. But looking at this picture here on the weekly, this is showing no signs of any deterioration whatsoever. It's going to continue a little bit longer, similar to this. It'll stay up a little bit more. And remember, the fundamental moves in the market are oil and banks. Those are the real big players. The biotechs, highly volatile, highly risky, big money, but you got to deal with the volatility. Techs, kind of the same way, whatever. But banks and oil, they are both starting to stabilize. What are you going to do? So you keep on, yeah, we can do tactical trades on shorts and this and that. That's fine. Those make good money. You can do a tactical trade and just be completely in cash by the end of the day. But you have to be vigilant how you watch the charts. But if you're doing a swing trade on something, then swing trade all the way up to 2130. There is no question about it. And yet we completely keep on saying no, 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 till we are dragged up there and we say, why the heck didn't we make money? Look, I'll be the first one to admit I didn't think the market was going to do the same thing that it did here. But I did show the probability, at least, you know, I had the credit of doing that, and I took profits along the way. But I feel like not shooting myself, I feel like slapping myself that I didn't completely stay long this entire trade. But then I'm only human, right? Despite all my robotic talk, you put $10,000 here on S&P calls going out to May of 2016. Can somebody tell me what they would be worth here where we are right now? Please, you guys are traders, so tell me. If you bought the May 2100 calls right at the bottom here, what do you think that $10,000 would be up here? Please don't stay silent because it really, you know, bores me. I mean, seriously, it like gets annoying. Come on, somebody wake up and give me the answer. Give me a rough answer.
216,000.
I love Seashell. Okay, 216. Keep on going. Somebody else, please.
500,000.
500,000. Wow. It's like one of those reality shows. Somebody else, please. Trina? Okay. Vic? Vikram?
I'll go with that. Yeah, I'll go with 200 or maybe maximum 300.
Okay. Trina said 200, 300. Who's Al in the group right now? Al?
That's Alex.
Hey, Alex. Okay. So what do you think this 10,000 would be if you had put 10,000 down here and where we are right now?
I said it would be 500,000.
Okay.
Guessing 500,000.
Okay. So here's a final conclusion. I don't know the exact number, but it's somewhere in that big six-figure range. So here's the question. Why didn't we do it? If you can truly answer the question by looking yourself in the mirror, I'm going to give you my mantle, take my cap off, and say, you're the next clueless eight. Because I didn't do it. I staggered my profits up. And you know what? At that time, if you listen to my video cast, I actually said that. I said, let's, we could just put a bunch in there. And I thought to myself, should do that and just leave it in there. So the lesson to be learned from this is if we look back in hindsight and see this type of picture and we don't keep on acting on it every single time that it happens, then why the heck are we sitting here looking for a top? Think about it for a minute. Because again, I don't want to sound religious. God is giving, but I will. Okay, I'll sound like, what's his name? Ted Cruz, Bible in hand. So God is giving us ultimate chances to say buy. Multiple chances, buy and hold. And we still don't. So what the heck are we doing? Sitting here saying everything is bad, the world is bad, and we're going to crash and burn. Ain't going to happen. Because I'll tell you what's going to happen. If we hit triple top, okay, and I've said this before, triple tops break out. Triple bottoms if we get down here, which we might by October, in my opinion. Right before the elections, the market's going to, excuse my French, shit really hard. Because the candidates that are out there, trust me, Wall Street's very, very dubious. Whether you like Wall Street or not is not my problem. If you don't like Wall Street, you're a socialist. I'm sorry. Okay? Because Wall Street is capitalism. So the point is, and hate me for it because I said that. So the point is that they're going to look at some of these candidates and say, you guys want to piss on Wall Street? We'll show you what we do to you. They'll crash the market just for the hell of it. Okay? And you tell me whether you have your jobs or not. All right? Let me know that. I'll see more cancellation of the memberships when the market crashes because right before the elections than I'll ever see. And trust me, I know these things. I was there during the crisis of 2008, 2009. So, saying all that is if we crack here once more, we're going down. We crack up here, we're going to go up a little bit. But if we crack down here, we're going to go down a lot. But what I'm getting at is once we get up here, don't expect it just all of a sudden stop and then have it crash. It will overshoot. It will overshoot. Reasons. The reason it's going to overshoot is because there is enough stocks on the energy side which are that are down more than 40 to 50% from their highs. There are enough stocks on the, believe it or not, on the tech side which are still down, 20 to 30% from their top. There are enough stocks on the biotech which are down 40 to 50 to 60% from the bottom, from the top. So you don't think they can catch up? In the meantime, I want the market to reset. So for that, I'll show you one last chart, which is the short-term chart. So short-term, what we're looking at, and this is where it gets really difficult, all because there's so many shorts in the market. I wish they weren't there, because if the shorts weren't there, I hope you all if you understand that, what I'm saying, then the market would have a nice time, I would have a nice little pullback, a regular pullback. But with the reason we don't get a regular pullback, because every one of these idiots, big hedge funds, and a lot of the smaller ones, are drinking the same Kool-Aid and constantly shorting the markets. Did everyone understand what I just said? Did everyone, did you guys understand what I said? I mean, seriously.
Yeah.
The reason why we're not falling is because there is so much shorts out there, they're acting as a cushion. And I am personally sick and tired of it because I want a nice short. I want the market to fall 400 or 500 points so we can get a nice little washout. But every time I'm trying to do a swing short, not a tactical short, tactical shorts are working. But every time I'm doing a swing short, it's not working. And as a trader, you can hear that in my voice, it's frustrating. This is the trading band that we are tracking right now, ladies and gentlemen, okay? We are sticking to the upper end of the band. This would be very nice. I believe this comes by May, mid-May or so, before it rebounds really hard. Now for that to happen, I need to see some of the technicals start to turn down, which I haven't, unfortunately. And if we drop from where we are down to here, we are talking about more than 100 points. We're talking 700 points on the down. More than 700 points.
May I ask a question?
Yes, I'll leave it for questions right now. Yes, please go ahead.
Do you think it's going to pull back to that level before it tests the highs or after it tests the highs? I'm sorry if I missed that.
No, that's a very good question. Thank you for asking. Who's that, Alex?
Yes.
Yes. No, after it tests the highs. We're on our way to test the highs right now. Look how the market's reacting. Look how the market's reacting. You know, every technical, minor technical dip is being bought, and beyond that, candles red first thing in the morning, bang, they buy it. You know, because it's not just us what's happening right now, Alex, and you'll understand this better than most people. It's what's happening in Europe and what's happening in Japan. You get it? So they are truly really pumping. Right now, the pump is on full. And when the pump is on full, you don't want to swim against it. So it's after we test the highs, after we test this zone right here, in my opinion. So yeah, so that's a straightforward answer. And once we test that zone, I think we are good to have a thing. But then if everyone's looking at the same technical, who's to say that we don't overshoot, right? Remember one thing about trading. Whatever that we do, when we enter a trade, let's say we enter a trade at 2, okay? Let's say we enter a trade at, sorry, one second. This happens to be all the time. Let's say I enter a S&P call at $6. Immediately it goes to 4. You know, just regular algorithmic stuff. I buy more. I keep on looking at the charts. And if I'm right, a lot of the times I have been, it runs to 9 real fast. Happened today. The 1 second here. The 2100 calls. Listen to this. Talk about volatility. The 2100 calls on the S&P 500. The April 2100 calls expiring on Friday was at $4.60 last night. Everyone, please follow me. Okay? Please follow me. $4.60. They opened at $4.40. They went to $1.75 in that initial sell-off in the morning. Everyone remember the initial sell-off? The big candle? Big candle?
Yes.
Okay, watch this.
Yes.
Wednesday. This one. Sorry, not this one. This one. Okay, the market's so freaking volatile. Okay, here, this one, right? So it goes to $1.75 here. So it opens up at opens up exactly where it was before, $4.60, goes to $1.75. This is just to give you an idea about S&P trading. That's why it's so important to track the charts, because it's going to move really fast. This is the S&P 2100 calls. 460, 175, end of the world. Oh my God, it's all over. This move up, you know where it goes? Take a guess. Take a guess.
$9.
11. $11.10. You're close. You just got a 900% move on your money for having guts and following real technical charts. But of course, when they took people down here, lots of stocks were triggered. They got off the board. By the time this happened, remember, these are expiring on Friday. That $11.10 calls, where do you think they went to? And this happened from 3 o'clock. Huh?
$3 probably.
Yes, very smart. Are you looking at it, or are you just saying it from the top of your head?
Just thinking from the top of my head.
Well, like we say in New York, man, I'll buy you a drink, baby. You're gonna go to you're going to Atlantic City with me. All right? You're absolutely correct. They went to between 250 and 3. Now, a lot of it has to do with the premium, the premium decay, because they're expiring 2 days from now. But I'm just trying to show you the type of volatility. So let's say, for example, you manage to get in, let's say, at 2. Who cares if it goes to 11? Well, I do care, because if you put, $2,000 here, that's $11,000. But let's say you catch the middle. This is what tactical trading is all about. You don't need to catch $11,000. You can catch maybe 3. You could put $1,750 here and sell halfway up. Okay, halfway up, so you can maybe sell it at 6, maybe. So you can take out 6,000. Is it easy? No. Is it that hard? Not really. If you program your mind to tactically look at the charts and on your own screens, and I keep on posting things, you can do it. Do we do it? Well, it's up to the person. So I'm just showing you the real life of how these things can happen. $1,750, you can take out 6,000. How long would it take? It would take from 10:30 in the morning till 2 o'clock. And believe me, in the market, 10:30 to 2 is like 2 years. Yes or no?
Yeah.
Especially in volatile markets. But if you put a small amount, and this is one of the biggest things I'll tell everyone tonight. And I'm not kidding around, because I'm not scripted. Okay? I'm not reading off a script here. I'm talking to you like partners and what we do. Yes, I have more experience. Yes, I have more losses. Yes, I have more winners. But as a person, I'm telling you, it is called risk. Embrace these 4-letter words and take that money and say, okay, I'm going to risk this much, and of course, I'm going to keep an eye on the thing, and I'm going to take a 50% haircut, but I think we can move from there. So if you are okay to bet $1,700, saying that, okay, I'm going to go down to 850. 800 is my limit, but I can make this much. Of course, you wouldn't know that it wouldn't go that far. But if you said that, okay, I can lose $850 in order to make 2,000, of course, you'd make a hell of a lot more. Then you got to do it. That's how you have to approach this market. If you're doing tactical trading, you have to quantify your risk. Now, it could very easily have gone like this, and your 1,700 would have been 850, and you're like, okay, I'm out. Can happen, but that's something you have to deal with. I can't control that. But what I'm saying is, in this type of dynamic market that we are seeing, you always have to quantify your risk, play with smaller amounts. Let's say you don't want to put 1,700. Let's say you want to put 800. So if you put 800 here, and this went from 2 to 11, so that's 500% on your money, right? 500%, yes. I mean, you tell me. You're going to take out $3,000. Do you know what it feels like to put 800 and take that $3,000? I know many of you have done that, but seriously, that's confidence. You put 8,000. If some of you guys are bigger players, 8,000, you're taking 30K. Anybody who's booking more than 8,000 on these type of calls is, you can, I guess, yeah. You can if you like, but on this type of short-term calls, I wouldn't recommend that. So that's all I'm saying. This stuff happens every single day. You think this is the first day it's going to happen? It's going to happen again tomorrow. So guys.
Frank, last question.
Of course.
Do you think buying the swing trade for the mid-May calls for 2130? Do you think it does it matter which price? Does it matter which levels, or should we wait for that tactical quick pullback? It might happen overnight. Or no?
No, that's a very good question. My feeling is that I would love a tactical pullback. I really would. Okay, and one thing that gives me a little bit of basis that we might be getting one is simply by looking at the technicals, even though the technicals have been moved on their head down. Okay, so the technicals are telling me, if you look at it this way, you can do this on your own on Thinkorswim, that we are overbought here, right, on the 4-hour chart, but it keeps on moving higher. So if we look at a short-term basis, this down here would be a better buy. In other words, 2090 would be a better buy than, but the problem is this happens in the middle of the night when we're sleeping. So personally speaking, I would like to see the stochastics down here in order to make a tactical buy. As you can see, look, look, there you go. See how powerful these buys are? Now this came down here. The most we got was this. So a little bit lower would be great. And this is where the difficulty comes in. So the best way to do it is to buy a little bit if we see the pullback. And then if I see a bigger pullback, then add a little bit more. In other words, scaling in and then go for the move. Because one way or the other, from what my gut is telling me, because of the short position and because of what's happening out there, you know, American Express is up nicely. That was one of our earnings plays, right? So American Express, where is it up right now? 1 second. Bear with me. AXP. Remember, this is a major player. Look at that. Okay, this was tonight. That was one of the things. That's a big move. For Amex, that's a big move. Okay? So that's a Dow component, right? There you go. Amex is a Dow component as far as I remember. So that is huge. That's a nice move. If you look at the daily charts, that stock is looking really good now. And everyone's saying, oh, Amex is terrible. You know, a couple of the big PepsiCo and stuff cancel contracts with them and all that stuff. Who cares? You know who cares? The technicals care, because right now, this is where Amex is going right now. Watch. This is the big gap. And this is where the stock is eventually going to land up. There's a small gap here. And that's exactly what the stock is after hours. No, actually after hours it's higher, because see that? I mean, these are very symmetrical charts. Now, somebody can say, well, how do you know that? I would do this. Watch. 1. Duplicate drawing. Look. Bingo. That's a beautiful chart. That's a beautiful chart, actually, when you look at it. You got one small gap and a large gap here. Large gaps take a little bit longer to, you know, to fulfill. Now, where is the stock right now on the 1 hour? I think it's at 67, because the daily, for some reason, doesn't show after hours. So it's at 67. It's at almost at 68. So let's go back to the daily. It's here. It's at the gap. See what I'm talking about? It's right here. Ladies and gentlemen, and you think the shorts are not going to cover? They're going to blow this stock up unless they say something really stupid on the conference call. I think it's tomorrow morning, or maybe it was tonight. I'm not sure. $71. It will complete this pattern. So this is the type of stuff that's happening under the belly of the market that is not letting the market go down. Visa is another one of the long-term holds, which is doing fantastic. But look, right now, after hours, it's at that gap that we just showed. Okay. I'm going to sign off. and I'm glad that you guys are in here. Let's try to manage our trades. All I'm saying is, lesson I learned myself, and I'm sharing, that's the reason I wanted to have this, is trying to short a powerful runaway market on a technical basis for reasons that we talked about is a very difficult business. I would rather look for entry points on pullbacks rather than try to short this unless we go really crazy and I start to see big fat red candles, in which case it's a different story. In the meantime, anything can happen. We know that. We have a lot of tactical buys. I still like Facebook a lot. We're mentioning that. And there's a lot of these earnings plays that are coming up. Whenever you do earnings, last thing and very important thing I'll tell people, do small bits. Don't buy way out of the stuff options and stuff. Buy a few shares. If you make some money, good. You know, you make some money, great. If it's keeping on going higher, at that point you can add on. But don't go out there and buy 30 calls at like $3 thinking the stock's going to explode. Yeah, it might work. But if it doesn't, you just lost a whole bunch of money for no reason. So earnings are a gamble. It's a quantifiable risk. I don't just put out earnings just because I think it's an earnings. I look at it. I think it's a feasible bet. I put it out there. Or else I would be putting 30 earnings a day out there, earnings plays. So that's it for now. Go tell your friends what we do out here. And thank you for attending.
Thank you.
You too.
Thank you, Frank.
Take care.
Thanks, buddy.
Bye, Sian. I'll talk to you later. Bye-bye.